Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Rocket Lab.
If you find our talks useful, please consider subscribe, like, and comment underneath. So I want you to just picture this for a second. Imagine you're trying to run a state-of-the-art billion-dollar artificial intelligence defense system.
Okay, setting the stage.
Right. So it's analyzing threats in real time, coordinating drone fleets, processing just terabytes of battlefield data. Now imagine you suddenly realize your physical servers are floating 300 miles above the Earth in low Earth orbit.
And they just went blind.
Exactly. They went blind, someone took them out, or, a solar flare fried them or whatever. Who do you call to replace them, like today?
You definitely can't wait 2 years for a traditional aerospace behemoth to build a custom rocket.
No, you need a replacement launched immediately. And our target today is the company answering that exact hypothetical phone call. Rocket Lab.
It's a phenomenal case study in how rapidly a company's narrative can shift when the macroeconomic environment demands a completely new kind of infrastructure.
Yeah.
The data we're looking at today, it tells a story of a market just waking up to a completely new reality.
Okay, let's unpack this. The goal for today is to get to the bottom of Rocket Lab's massive 2025 growth, because we really need to figure out why a company that, builds rockets is suddenly being grouped by institutional money with AI software giants.
Right, and defense contractors.
Exactly. And we also have to assess if their highly anticipated Neutron project makes this stock a solid multi-year hold, especially when you factor in some pretty aggressive risks looming on the horizon.
Which there definitely are.
Oh, for sure. Usually when you think of space companies, you probably think of billionaires burning massive piles of cash on wild sci-fi dreams.
Mars colonies, luxury space tourism, that sort of thing.
Yeah, exactly. But looking at these 2025 numbers, Rocket Lab looks less like a billionaire's hobby and more like a hyper-efficient FedEx for the cosmos. Is that a fair assessment of where they are right now?
Well, what's fascinating here is that your FedEx analogy gets right to the core of their operational philosophy. But we actually need to push it even further to understand the current market hype.
Okay, push it further. How?
To grasp why this stock is moving the way it is, you have to look at how Rocket Lab has fundamentally mutated away from being a highly speculative aerospace startup.
Because the market traditionally views space startups as basically money pits.
Exactly. Money pits with incredibly high failure rates. Knowledge of space technology is really only valuable to investors when you apply it to the broader macro environment.
Right.
In this current 2026 landscape, Rocket Lab isn't selling a distant utopian promise of space exploration. They are selling a hardened, proven, and vital logistics pipeline.
And the track record undeniably backs up that shift. So let's look at the financial engine first, because we need to talk about the actual mechanics driving these numbers.
Let's do it.
For the full year of 2025, Rocket Lab reported record revenue of $602 million.
Which is huge.
It's massive. That's a 38% year-over-year increase. And if you drill down into the end of the year, their Q4 2025 revenue hit roughly $180 million.
Handily beating analyst estimates, by the way.
Right. And that kind of sustained growth in heavy manufacturing is, it's incredibly difficult to achieve.
It's almost unheard of. You usually only see those kinds of revenue jumps in pure software companies.
Because the cost to replicate a software product is basically zero.
Exactly. But building physical rockets involves global supply chains, massive raw material costs, and extreme engineering tolerances.
Which makes their operational stats even more shocking. Get this, 21 successful launches in 2025. That is a 100% success rate for the year. I want to just pause on that for a second because, in orbital mechanics where a million microscopic things can go wrong in a split second.
A faulty valve, a frozen sensor, a tiny pressure leak.
Yeah, batting 1,000 is practically impossible. How exactly are they achieving a 100% success rate when the rest of the industry basically treats explosions as a normal cost of doing business?
It all comes down to obsessive vertical integration.
Okay, break that down for us.
Well, many legacy aerospace companies operate as prime contractors. They design the rocket, but they outsource the valves to, say, one company in Ohio, the sensors to a facility in Germany, and the software to a contractor in California.
So they're just assembling parts from all over the world.
Right. And when you have a fragmented supply chain like that, your quality control is really only as strong as your weakest vendor.
Which leaves a lot of room for error.
Exactly. Rocket Lab, on the other hand, builds almost everything for their Electron rockets in-house.
Oh, wow.
Yeah, they even 3D print their Rutherford engines.
Yeah.
When you control the manufacturing of the component, the software that runs it, and the launch pad it flies from, you strip out all those external variables that cause catastrophic failures.
And that level of control is exactly what brings us to the most surprising part of the data, their backlog.
The backlog is staggering.
It really is. Rocket Lab ended 2025 with a record $1.85 billion backlog. That is up 73% year over year. But I have to push back here a bit.
Right.
I'm looking at this 1.85 billion number, and while that looks great on paper to an analyst, in heavy manufacturing, a massive backlog can sometimes become a graveyard if a company can't actually fulfill the orders.
Right, if they get bottlenecked.
Exactly. So how insulated is that revenue from just sitting on a ledger forever?
Well, that vertical integration we just discussed is the very thing that insulates them. Because they aren't waiting on 100 different external vendors to supply parts, they can dictate their own manufacturing pace.
So they aren't at the mercy of someone else's delays.
Exactly. A backlog is essentially guaranteed future revenue waiting to be realized, giving the company incredible visibility into the next few years. They aren't wondering where their next customer is coming from.
They have a line around the block.
They do. And looking ahead, their Q1 2026 guidance is projecting $185 to $200 million in revenue, which represents a 57% year-over-year growth at the midpoint.
I hear that, but I'm going to play devil's advocate again. Because if you're a listener looking at your portfolio right now, you know that revenue doesn't always equal profit.
Fair point.
And there's some significant red ink here. Despite the perfect launch record and the soaring revenue, their free cash flow is still negative.
Yes, it is.
Furthermore, their adjusted EBITDA, which is basically a measure of their core operational profitability before you factor in things like interest and taxes, is guided to be a loss of $21 million to $27 million for Q1 2026.
Right.
So if they have a 100% success rate, why are they still bleeding cash?
This is a great question. Investors often look at aerospace companies through the lens of traditional retail or software businesses, where negative cash flow immediately signals a failing business model.
Yeah, you see negative cash flow and you panic.
But the key mechanism to understand here is the difference between burning cash to keep the lights on and burning cash because you are strategically pouring every dollar into expanding your moat.
Okay.
Rocket Lab's core business, launching the smaller Electron rockets, is highly efficient. The cash bleed is entirely coming from their capital expenditures.
Oh, so they are basically building the factory for the next generation of rockets.
Precisely. They are funding the massive research, development, and infrastructure required for their new medium-lift vehicle, which is called Neutron.
So instead of using their incoming capital to execute stock buybacks or, pay dividends to appease short-term investors,
they're sacrificing immediate profitability to build a much larger engine for tomorrow's market.
that makes total sense. It's like a successful regional airline spending all its profits to buy a fleet of jumbo jets so it can eventually fly international routes.
That's a great way to look at it.
And that ambition leads directly to the second major theme we need to talk about. That 100% reliability and vertical integration isn't just a nice PR talking point. It's the exact reason the Department of Defense is suddenly treating a rocket manufacturer like a critical national security asset.
We are seeing a massive defense and AI rotation happening right now.
Yeah, and if we connect this to the bigger picture, the macroeconomic environment is driving this re-rating. National defense strategy has pivoted heavily towards space.
Oh, absolutely. And the numbers validate that pivot aggressively.
They really do. There's a massive $816 million prime contract Rocket Lab secured with the Space Development Agency, or SDA.
Which makes up a huge chunk of that $1.85 billion backlog.
Right. And it guarantees massive multi-year cash inflows. But the market sentiment around this is what really caught my eye. On March 11th, 2026, Rocket Lab shares jumped significantly.
And do you know why?
Because the company was actively grouped with AI-enabled defense leaders amid a major push for national security spending.
Exactly. The institutional money recognized the shift before the retail market did.
They always do.
Yep. There was significant whale activity. Massive institutional level buying in the industrial sector on March 9th. And then a week later, The Touchstone Mid-Cap Growth Fund specifically highlighted Rocket Lab's outperformance.
Plus, you have Cantor Fitzgerald reiterating an overweight rating with an $85 price target.
And an overall consensus from 11 analysts rating it a buy. We even have Kathy Wood reframing her entire defense thesis around space infrastructure.
Here's where it gets really interesting, and honestly a bit counterintuitive.
Okay, let's hear it.
I look at this data, and I see a company that builds metal tubes filled with highly combustible rocket fuel. Yet, Rocket Lab is being positioned as the leading AI defense trade alongside Palantir.
Yes.
Now, Palantir is a pure software company. They build complex data analytics platforms for intelligence agencies. How in the world does launching small rockets translate into an AI and defense boom?
It's all about infrastructure. We tend to think of artificial intelligence as this invisible floating brain in the cloud.
Right, just magic code.
But AI is entirely dependent on physical hardware. It requires massive, uninterrupted data networks and rapid response capabilities to process information.
Okay, I'm following.
In modern national defense, those data networks increasingly depend on secure, rapidly deployable infrastructure in low Earth orbit.
Space is the new server room.
That is the perfect way to visualize it. Think about the concept of a mesh network. Modern militaries don't want to rely on one giant, multi-billion-dollar satellite that takes 10 years to build.
Because if an adversary shoots that one satellite down, your entire military goes blind.
Exactly. Instead, the Space Development Agency is building a proliferated architecture, a mesh network of hundreds of smaller satellites. If one goes down, the network instantly routes the data through the others, just like routers in your home or office.
But if one of those nodes is destroyed, or if a new mesh network needs to be deployed over a specific conflict zone immediately, you still need to get new hardware up there. Fast.
And you can't wait for a legacy contractor to schedule a launch 18 months from now.
No way.
You need rapid response. You need the courier service. Rocket Lab provides the physical layer for these digital defense networks.
Wow.
Their guaranteed success rate and their ability to launch quickly create incredibly high switching costs. The Department of Defense sees them not just as a delivery service, but as a crucial pillar of their AI and data infrastructure.
So you cannot have a secure AI defense grid if you do not have a secure, reliable way to put those assets into orbit on demand.
Precisely.
Okay, that completely reframes the narrative. If you're listening to this and wondering why a rocket company is grouped with AI, think of it this way. Palantir is building the analytical nervous system for the military, and Rocket Lab is laying down the physical pathways for that nervous system in space.
They aren't just selling launches. They are selling the maintenance and deployment of sovereign data networks.
Which is why analysts are aggressively upgrading their price targets. They are no longer valuing Rocket Lab strictly on the margins of aerospace manufacturing.
Right, they are applying defense tech infrastructure multiples to the stock.
It's a highly compelling narrative. But before we crown Rocket Lab the undeniable winner of the new space race, we really have to look at the immediate hurdles threatening their momentum.
We do. There's a significant bear case here that we cannot ignore.
Because no transition of this magnitude happens without operational turbulence?
The physics of scaling up aerospace manufacturing are unforgiving.
Yeah, to put it mildly. And the biggest red flag revolves around the Neutron project. We mentioned earlier that they are pouring their cash into building this new medium-lift vehicle.
Yes.
Well, it's hitting serious speed bumps. The first launch of Neutron has been officially pushed back to Q4 2026. And this is apparently due to a stage 1 test failure.
Right.
Can you break down what that actually means? Why does a stage 1 failure cause such a massive delay compared to, like, something else breaking?
Well, in rocket design, stage 1 is the heavy lifting. It is the massive, violent initial thrust required to rip the vehicle away from Earth's gravity and push it through the thickest part of the atmosphere.
So it takes the brunt of the force.
Absolutely. The engineering tolerances here are brutal. When a test fails on the first stage, it usually isn't just a minor software glitch or a broken sensor you can swap out in an afternoon.
What is it usually?
It often means a structural failure under extreme acoustic or thermal stress.
So it means going back to the drawing board on the core physics of the vehicle?
Frequently, yes. You have to redesign the structure, manufacture the new parts, and test it all over again.
Wow.
That burns months of time, and more importantly, it burns tens of millions of dollars.
And this delay is the direct cause of those widening Q1 EBITDA losses we discussed earlier, right?
Exactly. They have to keep the engineering teams funded for longer without seeing any revenue from the new rocket.
And while they're burning cash trying to fix Neutron, there is an absolute giant looming over them in the broader market.
The SpaceX elephant in the room.
Exactly. On March 16th, there were intense rumors of a SpaceX IPO generating massive market hype. This feels like a very real threat because a SpaceX IPO could potentially act like a black hole, sucking huge amounts of institutional capital away from smaller space players like Rocket Lab.
It's a valid concern.
Honestly, it feels like being a really great, highly efficient local coffee shop right across the street from a brand new Starbucks. If SpaceX goes public and dominates the sector, does Rocket Lab's small launch niche even matter anymore?
This raises an important question about market positioning and how different payloads actually get to orbit. It is very easy to look at SpaceX's massive achievements and assume space is a winner-take-all market.
Yeah.
But if you dig into the operational realities of orbital mechanics, the risk assessment looks quite different.
Explain that. How do orbital mechanics protect Rocket Lab from SpaceX?
Think about your Starbucks versus local coffee shop analogy. Let's adjust it a bit. SpaceX is building freight trains.
Okay, freight trains.
Their Starship vehicle is designed to move massive amounts of cargo, hundreds of tons, into orbit at once. A freight train is incredibly cost-effective, but it only goes to one specific station at a time.
Right.
If you launch 50 satellites on a single SpaceX rocket, they're all generally going to the same orbital inclination.
They all get dropped off at the same stop.
Correct. But there is a massive growing demand from defense and intelligence sectors for targeted, customized, rapid response launches.
For those mesh networks we talked about.
Exactly. Sometimes the military doesn't need to launch 50 satellites. Sometimes they need to put one highly classified, highly specific asset into a very unique, non-standard orbit.
And they need it there in 48 hours to monitor a sudden geopolitical crisis.
Yes. They can't wait for the SpaceX freight train to fill up and follow its set route. They need the medical courier on a motorcycle.
Oh, that's a great analogy.
And that is exactly what the Electron rocket is. Rocket Lab's agility, their protected intellectual property, and that end-to-end vertical integration keep their smart launch niche highly defensible.
So they aren't trying to outlift SpaceX.
No, they are providing a tailored, bespoke service that defense clients desperately need for that mesh network resilience.
And regarding the financial risk of the Neutron delay, while the delay is a setback, it is manageable.
Because of that $1.85 billion backlog.
Right. Their smaller Electron rockets are highly reliable, they are flying regularly, and they are generating the near-term cash flow needed to act as a financial bridge.
And the broader market seems to recognize this differentiation. While there are some neutral baseline sentiment scores out there, the valuation reset over the past year has likely already priced in much of the SpaceX threat.
And the anticipated development hurdles for Neutron?
Exactly. Bullish analysts view Rocket Lab not as a second-place competitor to SpaceX, but as the pure-play leader in a very specific, lucrative defense niche.
Which brings us to the synthesis of all these moving parts. Based on everything we've gone through today, the final investment thesis yields a highly bullish score of 9 out of 10.
It's a strong conviction play.
Yeah. The core takeaway here is that institutional analysts are not framing Rocket Lab as a quick flip or a speculative day trade based on launch hype.
Definitely not.
With a 38% revenue growth hitting $602 million, the insulation of that $1.85 billion backlog, and deep physical integration into the future of AI defense infrastructure.
It is overwhelmingly positioned as a solid multi-year hold into the eventual Neutron launches.
The upgrades to that $85 price target, backed by validation from major institutional funds, really signal that the market is finally digesting this transition.
Rocket Lab has successfully crossed the chasm from an experimental aerospace startup to a foundational defense contractor.
So what does this all mean for you? If you are tracking the sector or evaluating the space allocation in your portfolio, the timeline is very clear.
The next couple of months are going to be critical.
Exactly. Keep a close eye on late April or early May 2026 when Rocket Lab releases their Q1 earnings. That is going to be the moment of truth.
You really need to watch two things. First, can they actually hit that 192 to 199 million revenue guidance?
And second, have the engineering challenges with the Neutron Stage 1 delay widen their cash burn beyond the projected $27 million EBITDA loss.
Those earnings will be the ultimate test of their operational resilience under pressure. But I actually want to leave you with a thought that stretches beyond the immediate quarterly earnings reports and the analyst targets we've covered today.
Okay, lay it on us.
We've established that space infrastructure, combined with artificial intelligence, is rapidly becoming the ultimate competitive moat for global national security.
Right.
Which makes me wonder, are companies like Rocket Lab fundamentally transitioning away from being aerospace manufacturers entirely?
Wait, if they aren't aerospace manufacturers, what is the end game?
Well, think about it. If the physical layer of the global AI and defense network resides in low Earth orbit, and Rocket Lab controls the deployment and maintenance of that layer, then they are effectively becoming sovereign data utility providers.
Oh, wow.
They aren't just building rockets, they are building the infrastructure that allows data to exist securely.
That's fascinating.
If space is the new ocean of the 21st century, the geopolitical reality is simple. Whoever builds the safest, most reliable ships will ultimately control the global trade of data.
The hyper-efficient courier of the cosmos, delivering and protecting the data that runs the modern world. That is a massive paradigm shift to keep in mind the next time you see a launch video. Thank you for joining us on Smart Wealth with Joshua. Keep your eyes on those late April earnings, and we will catch you next time.